Hello friends. Last time I discussed about certain provisions of the Indian Partnership Act 1932, that in the absence of a partnership deed, the provisions of Indian Partnership Act 1932 shall apply. And what are the provisions? That the profits and the losses will be shared equally. Interest on capital is not paid. Interest on drawings is not to be charged. Interest on loan, that is loan advanced by a partner, is to be paid at the rate of 6% per annum even if there is a loss. Any kind of remuneration, nothing will be paid to the partner as per the provisions of Indian Partnership Act 1932. Now we will move on to the actual accounting part of the partnership. That is how the profits and losses will be shared among the partners, how they will be accounted for in the books. Okay. So what we have is, now we will start with the actual accounting part of partnership. Okay. Now, first of all, we will start with profits. Now, in the very definition of partnership, I told you that it is an association between two or more persons to run business, and there was one more element, that is the sharing of profits and losses. That is sharing of profits and losses. Now, how these profits and losses are to be shared and accounted for in the books of partnership firm. Now, this is important. You have studied about the profit and loss account. Okay. How it is prepared? We have profit and loss account. Okay. We have something like this. Now, what you get in the profit and loss account? Here is the incomes. All the incomes will come on this side. This is the credit side and this is the debit side. All the expenses will come here. And what is the net result? Net result is the profit that you get. Suppose the income is 2 lakhs and the expenses are 1 lakh. So remaining 1 lakh is our profit. Okay, so this is the profit of a partnership firm in case of partnership. Now, it says that this 1 lakh is to be shared among the partners. If the partnership deed provides the profit sharing ratio, then this profit will be shared in the profit sharing ratio given in the partnership deed. If partnership deed is silent, then the provisions of Indian Partnership Act 1932 will apply, which says that all the profits or the losses will be shared equally. Okay. Now, how the accounting is done for this? For this, we prepare one profit and loss appropriation account. Appropriation is what? It is distribution basically. Profit and loss appropriation account. It is nothing but an extension of profit and loss account. Now, how it is to be prepared? In the same way, we have the debit side, we have the credit side. Now what will happen, here we get the profit of 1 lakh. We will transfer this profit to profit and loss appropriation account. What we will get here by net profit, because it is our income. Okay, 1 lakh. Right. Now this 1 lakh is to be transferred to the partners capital account, to be transferred to partners. Okay. Now suppose we have two partners X and Y. They will be sharing the profits equally, that is 1:1 is the ratio. Now these profits will be divided among X and Y. Now X will get, what will X get? 50,000. And what will Y get? 50,000. Okay, clear? Now this is all about profit, that we earn a profit of 1 lakh, we record it in the profit and loss account. From there we will transfer to profit and loss appropriation account. Appropriation means distribution. Okay, and this profit we will distribute among the partners in the profit sharing ratio. Clear? Now the profit sharing ratio, it can be defined in the partnership deed, or the provisions of Indian Partnership Act 1932 will apply. Now it says, now we will take the second thing. This is simple. If we earning profit, we are distributing profit among the partners. We are earning 1 lakh, we are distributing 1 lakh among the partners, 50,000 to X, 50,000 to Y. This is one thing. This was profit. Okay. Now second we have interest on capital. Okay. In the interest on capital, suppose X has a capital of 1 lakh and Y also has introduced a capital of 1 lakh. Okay, and it is defined in the partnership deed that interest on capital will be paid at the rate of 10%. It is given in the partnership deed. Now if the partnership deed is silent as to the interest on capital, then the provisions of Indian Partnership Act 1932 will apply, and it says that interest on capital will not be paid. Very simple. Okay, so here I am taking that the partnership deed defines, clearly says that interest on capital at the rate of 10% is to be paid to the partners. Now how it is to be treated? Similarly, we have a profit of 1 lakh in the P&L account. Now what we will do is we will prepare P&L appropriation account. We will prepare P&L appropriation account. Okay, this is the debit side, this is the credit side. We have profit by net profit 1 lakh. Okay, now what will happen, this company, this partnership firm has to pay interest on capital of 1 lakh at the rate of 10%. That is 10,000 is to be given to the partners each. Okay, what will happen here is we will say to interest on capital. Okay, now how much will X get? X will get 10,000, that is 1 lakh into 10 divided by 100, 10%. Okay. Similarly, what will Y get? Y will also get 10,000, same 1 lakh into 10 divided by 100. So total interest on capital comes to 20,000. Now the firm earned a profit of 1 lakh. Out of 1 lakh, it has paid interest on capital 20,000. Now what are the remaining profits left? Because interest on capital firm has to pay, it is an expense for the firm. Okay, so we'll record expenses on the debit side. So what are the remaining profits now? Remaining profits is 80,000. Now this 80,000 will be divided among X and Y equally to net profits transferred, X capital account and Y capital account. This total is 80,000. Okay, and X will get 40,000 and Y will get 40,000, and this way your appropriation account is closed. 1 lakh here and 1 lakh here. Simple. See, in the partners introduce their money into the firm. Now the firm is liable to pay them interest, okay, on that money. So it is an expense for the firm. Expenses we record on the debit side of P&L account. Similarly, the expenses will be recorded on the debit side of the P&L appropriation account, because what we have to get, we have to find out the actual profits that are to be transferred to the partner's capital account. Okay, the actual profits which are available for distribution. Fine. So now we have, out of 1 lakh profit, the firm is paying interest on the capital of 20,000. It is an expense for the firm, and X and Y will get 10,000 each, and net profits what we have is 80,000. 80,000 will be distributed among X and Y in the ratio of 1:1, that is 40,000 each. Okay, simple. So these are the first two concepts. Number one is profit. Okay, if the partnership deed provides for the profit sharing ratio, the profits will be divided in that ratio. Otherwise, the provisions of Indian Partnership Act will apply, and what it says, that the profits and the losses will be shared equally. Now we get net profit in the profit and loss account. Okay, and that net profit we transfer to P&L appropriation account, which is nothing but an extension of profit and loss account. The rules are the same. Incomes we record on the credit side, expenses we record on the debit side. So we transfer this profit of 1 lakh to P&L appropriation account. Okay, and then we transfer this profit to X and Y. We distribute this profit among the partners. I have taken this ratio to be 1:1, that is equal distribution, right? Second thing I took on was interest on capital. Okay, so suppose X has a capital of 1 lakh introduced into the firm, Y has a capital of 1 lakh introduced, and partnership deed is not silent. It says that interest on capital is to be paid at the rate of 10%. Okay, Why this interest is to be paid? Because X and Y are introducing their own money into the business. If they had kept that money in the bank, they would have earned interest. To compensate that, the firm will pay them the interest instead of the bank. Okay. So in the P&L appropriation account, the firm is earning a profit of 1 lakh. Now before distributing the profits, it will pay the interest on capital. Interest on capital is 10%. So 10% of 1 lakh comes to 10,000 each. Total interest of 20,000. Remaining profits for distribution, what we have? We are left with 80,000. That will be distributed among the partners in the ratio given either in the partnership deed or according to the provisions of Indian Partnership Act 1932, that is distribution of profits equally. Here I have assumed that the profits are distributed equally. So X will get 40,000, Y will get 40,000, and the P&L appropriation account will be closed. Okay. So you can write these down. These are very, very important points to understand, because we'll get the practical problems on this thing. Okay. So these are the two concepts, profits and the interest on capital.